Do you think there needs to be a rotation of capital away from the tech stocks for the gold price to continue to rise, or can they be? Are they kind of mutually exclusive? You know?
I think they're mutually exclusive to a degree. There's so much money sitting in the money market funds. I think the last number I heard was like $5 trillion or something like
Yeah,
that. It's just sitting there. Um, if we get a small percentage of that, I'm happy with it. That'll move the markets like you would
yeah,
not believe. We're such a small sector. If you throw all the mining companies combined, we're not even half what Apple is worth. I believe it's way less than that, right? I don't have the exact number in front of me, but you can do the math, and there's enough charts on Twitter or on X floating around that show you how undervalued this sector is in comparison. And even if we only get back to like historic norms when mining stocks were in the S&P 500, we get back to that. I think it was 10% level. Then we're off to the races. That sounds like absolute euphoria, and I'm trying to make a massive bull case here, but it just
yeah.
shows like how ignored this sector has been. Newmont was one of the worst performers in the S&P 500 for the last 6 months, or for the first 6 months of the year. I looked it up; it was like ranked 480th or something in there in performance-wise for the first 6 months, despite record high gold prices. But they couldn't show the market that margins have been improving at the time because all-in sustaining costs are still or have moved up for Newmont as like many others as well, $1,500 roughly, which is a chunk of money for just an ounce of gold. But now we're trading at $2,700. That means $1,200 margin roughly.
Yeah.
That's a lot of money, and I haven't seen that in my career, right? So yeah, that's the opportunity.
Right.
Quick break here, guys. Today's episode is brought to you by Coppernico Metals. Now, regular viewers of my channel will be familiar with the entrepreneur behind Coppernico. His name is Ivan Bebek. Now, although a young man in this business, Ivan's already created tremendous value for his shareholders in the past, namely with Caden Resources, which he sold to Agnico Eagle, and Keegan Resources, which became a mine now owned by Galliano Gold. Now, Ivan has surrounded himself with expertise from BHP, Newmont, and VRIC on his board at Coppernico Metals. Check out coppernicometals.com. Now back to the interview.
We've got to talk about the gold price a bit more in detail, given the unbelievable run that it's been on. I mean, in my country, the UK, we just hit £2,000 gold for the first time. I know you speak to a lot of experts about the future of the gold price, and of course, you're an expert in your own right, but I'm curious to know where you think gold is headed for the rest of this year. You mentioned potentially a correction, and I guess beyond that as well, your thoughts on the macro situation and conditions that will characterize the rest of this year too. I mean, do you think the Fed's going to, continue to ease rates, or do you think it'll actually go,
Well,
I need to, Jerome Powell might stop and just suddenly park rates where they are, in which case, what happens to gold?
yeah, if that happens to gold, of course, it will crash back down to $2,300 quickly,
Yeah.
right? Do you believe that? I don't. So
No.
if he's already said we're going to cut another 50 basis points, whether
Yeah.
that's at the next meeting or the one after, or if it's 25 and 25, it doesn't really matter. That the message is out. Fed Watch says about 58%, 60%, 50-point basis cut right after the U.S. election, which is interesting because that's another interesting factor if that's coming down the pipeline here. But Gold is set up for a stronger rally. Technically, I think we're a little overbought. I had Gareth Soloway on my channel yesterday, and he explained it. He was looking at the logarithmic daily candles, drew a nice line from, I don't know, back in the 1980s till today, and we're just touching on that line. If you connect all the highs at one point, we're just touching on that line. So he expects a bit of a pullback to 25, which personally, again, I don't have a problem with it. I think it's healthy that the market corrects a little bit. Nothing is healthy if it goes up in a straight line. Trust me, it cannot be healthy because it will crash way harder than you want it to. And if you want a sustained rally, you need small corrections, right? You mentioned so many factors that are like hammering on the gold price. Fed rate cutting cycle, but also the weakness of the dollar. We're only trading at about 100 for the Dixie, 100.5. It looks like the chart wants to break down. It's tested the 100 level a few times from the top, trying to go down. I'm not a technical analyst. I'm just looking. Those are just observations from my end. But we've seen gold break out after it touched on that, 2080 mark, I think, 4 times. Yeah. And I'm seeing the same thing now happening with the Dixie, that it's touching on the 100-point mark, the third time, I think, now on the way down. And if that happens, we'll quickly see 95, maybe even 90, depends on some of the other macro factors and how bad or how the economy in the US is performing. according to Jerome Powell, everything is honky-dory. You don't have to worry about anything. Inflation is tamed. Unemployment is in check. But do you believe that? I don't. And just looking around, just you can tell there nothing is in order. And unemployment just doesn't stop because you cut by 50 basis points. Yes, we've seen a jump in mortgage rate applications. That was an 11% week-over-week jump. Whoopity-doo. I think that was to be expected, right? But existing home sales are down. New home sales didn't perform as well. So I think there's a long way to go for the U.S. economy to recover. Is it going to be a massive hard landing? The U.S. might get away with one. I mentioned that before on my channel, but there's going to be correction. And if you look at the U.S. debt situation, if that doesn't worry you of $35 trillion, then I'm not sure what will. But that's a problem that needs to be solved. None of the U.S. presidential candidates is addressing it. So what is the solution? I think we will be kicking the can down the road. And I was interviewed the other day, and I was asked, "Hi, what's your biggest worry? What's your biggest concern?" My biggest concern is that, yes, I'm sitting here telling you the market is going to correct, but it might not happen for the next 10 years because we're just kicking the can down the road. And that's my biggest fear. Like, I've been expecting a massive market correction for the last 10 years because we've been printing money. The government has been intervening in the free market like you would not believe. I think it was Harry Dent that said that $27 trillion were pumped into the market the last, since 2012, 2013. So that's 10, 11 years, 12 years maybe. That's impossible. That's a massive market intervention, and all the things that you and I learn about in school don't apply.
No,
it don't. Right. So that's what's weighing on gold. And that's why gold is up. And there you can throw in central bank buying in the East. I mentioned the BRICS currency. Maybe that's a factor, but the U.S. weaponized the U.S. dollars. So I would blame them. It's their fault for doing that, because now countries are seeking security by maybe bringing some gold home. Saudi Arabia apparently just bought 160 tons of gold in Switzerland, having that delivered back home. So everything's moving east, and seems like there's a bit of a shift happening, but it was all self-inflicted, right, to a degree. And we'll see how we can pay the piper here, if we have to pay the piper, and when do we pay the piper, right? The suffering might be prolonged. We're kicking the can down the road. Look at Japan, debt to or GDP to debt ratio, not GDP. It's 255%.
Yeah,
debt to GDP ratio. Sorry, that's the is 255%. The US is at 122. So we got a long way to go. The U.S. can really go absolutely ballistic printing money and maybe hopefully using that money for the right reasons, maybe fixing infrastructure and some of that interstate network. And I see them spend money at least on airports by traveling around. So that's good. I'm sure you've flown through Denver. So there's stuff happening, like the lounges, the airlines are investing. So there's a bit of optimism there. But wow, that was a long answer, Ted. I apologize for that.
No, you covered a lot.
All the signs are pointing up for gold. The only thing I haven't figured out yet, because we've been talking about gold and high gold prices on our channel for the last 4 years, pretty much. And when we said we'll break through $2,000, the US is going to be burning. And that hasn't happened yet. Is it burning? No, we're kicking the can down the road. And I think that was more, looking back now, people expected much worse in the US, given a $2,000 gold price. So if things get much worse, where's gold going to be?